Divergence detected. The 30-year Treasury closed at 5.25%, a level that, before the summer, hadn't been seen since 2007. One stock and one ETF rose to the top of today's scan, and the reason behind them starts with artificial intelligence. That payoff's coming, but first, the indexes printed something that changes the setup. SPX preserved its higher high structure on the close, but the system flagged a confirmed topping tail on the daily, and the Nasdaq has already started rolling lower, down about 0.30% on the session. VIX Bollinger Bands are compressing, which historically signals volatility reloading. The open question: if Nasdaq has already peaked, does SPX follow? Or does the sector strength the scan picked up mean something different? Breadth is lagging. The junk bond signals don't line up with the index level, and that mismatch is exactly what makes the bond market the next critical readout. The DXY is holding near a key support zone, but the macro story the system ingested centers on bonds. The 30-year is at 5.25%, a level that before this summer hadn't been seen since 2007. TLT took on unusually heavy volume, and the back end flagged that U.S. interest costs have doubled to 20% of tax revenues since 2020. That's a structural signal, not just a headline number. Here's what's unresolved. With the dollar soft and rates this elevated, is the market reading this as pure inflation pressure, or is growth holding underneath it? The energy data tells the first part of that answer. XLE is the top sector mover, up nearly 6% last week, driven by Hormuz supply risk data the system flagged. Here's the read. Energy leading on supply fear is inflationary, not a clean risk-on signal. That's a different kind of leadership than energy leading, because growth is accelerating. And inflationary moves like that one always have a direct read-through for what metals did next. Gold reclaimed its weekly 20-period moving average, posting a strong close, and silver pushed a higher high, both constructive. Copper is the piece that doesn't line up. It made a higher high midweek and then reversed sharply into the end of the week, splitting metals leadership right down the middle. The system's read on that split: gold and silver holding while copper fades, says the inflation hedge story is intact, but the global growth backing isn't confirming. That copper reversal connects directly to the tension the system picked up across international markets. Japan is the focal point across international markets. Coordinated FX intervention is helping stabilize EWJ, but the system flagged a notable development. A major investor liquidated nearly $300 billion in Japanese bonds right before Japan released new debt figures. And that kind of exit is exactly what the back end treats as a meaningful signal. The yen path is contested. One camp sees intervention holding, the other expects yen weakness to resume. And that disagreement is keeping EFA and EEM without a clean direction. The chart and the fundamental story across internationals don't line up right now. That cross-market FX stress is exactly why the crypto picture came up so divided. The crypto read is split. IBIT alone pulled in nearly $700 million in spot ETF inflows on the session, signaling firm institutional demand. But the technical picture the system picked up tells a different story. Bitcoin formed a lower high just under 67,000, and the 66 to 70,000 zone is flagged as resistance, where any bounce is expected to stall. The flow and the chart are pointing in opposite directions, which is a classic unresolved regime the backend flags as high uncertainty. And that unresolved signal is exactly what makes the scan's structural filter so valuable in an environment like this, with the 30-year at pre-crisis yield levels. That's the macro backdrop the scan ran against today. The number one stock this scan surfaced is still ahead. SignalFinder Pro filtered 134 symbols, and the system pushed 3 names to the top: one sector play, one ETF, and one stock. The filter doesn't chase macro noise. It reads the structural signals underneath it, and today's output reflects that. The sector readout. Financials top the ranking with XLF in the number 1 slot. Healthcare in second with XLV. Both flag as leading. Real estate rounds out the top 3 with XLRE, but it's lagging and pulled back on the session. The signal state there is different from the top 2. What the system surfaced is financials and healthcare leading, while long-duration yields are elevated. That combination tells you money is finding relative safety and structural quality, not broad risk-on condition. With Nasdaq already rolling lower, seeing financials and healthcare at the top of this ranking is the scan's answer to where strength is concentrating. CIBR sits at the top of the ETF ranking, the first trust Nasdaq cybersecurity ETF, flagged on watch and up nearly 3% on the session. What makes this rank meaningful is that CIBR tracks the entire cybersecurity theme rather than a single name. So when the system puts it at number 1, the read is sector-level structural strength, not a single company event.
And today, there is a specific catalyst behind it.
At the Black Hat Security Conference in Las Vegas, AI agents were named the leading new attack vector, with analysts there describing AI as having moved from a security feature to part of the attack surface itself. When an entire theme reprices on one catalyst, a theme-level ETF holding the top spot is exactly the kind of signal the scan is built to surface. The number 1 stock is CrowdStrike, CRWD, flagged on watch and up about 5% on the session. It's the largest pure-play endpoint security name on the scan. And the read here isn't just about one stock. The system flags whether peers are moving with it. Today, they were. Palo Alto Networks rose almost 6%, Fortinet added nearly 3%, and both CrowdStrike and Palo Alto finished the session at record highs. That's sector rotation showing up rather than a single name reaction. And the distinction matters. CRWD topping the stock ranking, while CIBR leads the ETF side. Is the system saying cybersecurity is showing coordinated structural strength? That's the payoff, the cold open scan surface. Cybersecurity topped both sides of today's scan, and the catalyst was concrete. AI agents named the leading attack vector at Black Hat, with CrowdStrike and Palo Alto closing at record highs. Against that, the 30-year Treasury at 5.25% is the macro backdrop worth carrying into tomorrow. The thing to watch, does the 30-year confirm at this level? Or does it fade back? Because if it breaks through resistance, the scan's output could look very different next session. Verify both CIBR and CRWD live in SignalFinder Pro. And remember, this is educational, not financial advice. Do your own homework.